Hello everyone, and welcome to our channel CodeResist. Today, we're diving into a crucial concept in finance and investment, the discounted cash flow, or DCF method. Whether you're a budding investor, a business student, or an entrepreneur, understanding DCF is essential for assessing the value of a company based on its future cash flows. Let's break it down. Discounted cash flow is a valuation technique used to determine the value of an investment based on its expected future cash flows. The method involves projecting these cash flows and then discounting them back to the present using a required rate of return. The beauty of DCF is that it really focuses on the core of what a business is all about, generating cash. But how do we do it right? Let's go through the steps. Step 1 is to estimate the future cash flows. These are the amounts of money you expect the company to generate in the future, after considering all expenses and taxes. Step 2 involves selecting the right discount rate. This rate should reflect the risk and the time value of money, basically the return you would expect from a risk-free investment plus a risk premium. And finally, step 3, calculate the present value of those cash flows. This gives you what those future cash flows are worth right now, and it's the core of DCF. Let's apply this with an example. Imagine a company expects to generate $100,000 annually for the next 5 years, and the discount rate is 10%. What's the DCF value? Using our formula, the present value of these cash flows would be roughly $379,078. This means, according to our DCF analysis, the company is worth today about $379,078 based on those future earnings. It's important to note that while DCF is a powerful tool, it's sensitive to inputs like cash flow projections and discount rates. A small change in these assumptions can lead to big changes in valuation. And there you have it. You've just learned how to use one of the most important methods in financial valuation. If you found this video helpful, please give us a thumbs up, subscribe, and ring the bell for more insightful finance videos. Have any questions or need clarification on DCF? Drop your comments below.